Hey guys, welcome back. Johnny here. If this is your first time watching, I show you how to make money in the stock market. So if you like that kind of stuff, feel free to subscribe to my channel and click the little bell so you don't miss anything. Now today I want to talk to you about a strong buy. And my strong buy for today, and actually for the rest of the year, is MasterCard, or MA. So if you came here to see that, I'm going to go over some information and show you some different other people's opinions and some other analysis reports I've gotten from the Street, Market Watch, etc. on why this is a strong buy. So let's get into it right away. So as you can see, MasterCard is at $199.52. It had 64% growth in 1 year. That's $78, guys. That means if you would have bought it July 14th last year for $126 per share, you'd be at $200 a share right now. 5-year growth, even better, 245%. You could have bought this guy for a whopping $61 back in 2013. So for a lot of the early investors and people that have already made their money and cashed out or are still holding on long term, this was a great company and stock to get into. Now, why is this a great company to get into? Well, it has a very low volatility, as you could see. It has a great upward trend. You hardly see any downward trends at all. I've seen a lot of companies in the 5-year mark really push the volatility meter up and down, up and down. So it's interesting. It says it's basically ranked under payments, finance, banking, business service, and technology. And of course, all we know MasterCard is as, buying stuff, credit cards, purchases, stuff like that. So here's some other news topics if you guys want to check that out. Its 52-week low was at $121.82. It is a little bit more expensive to buy, a little bit more expensive in value at $49 for a PE ratio. It has $209 billion market cap, which is great. 4 million average volume, so it's a little bit liquid. Today there was less than a million, Friday there was less than 1 million shares traded. It was only about 500,000, and then their dividend yield is only at a 0.60. So not a great dividend yield, but I believe if they paid more of a dividend, they wouldn't have such an extreme growth. So it actually works out in your favor for just basically a long-term hold or a strong buy in general. So with that said, their Q2 earnings was estimated to be at around 120, 125. They shot that out of the water and are up around 150 now per share. So the new earnings call will be out on July 26th, and looking forward to that. Now, I don't actually own MasterCard, but I have in the past. Actually, it doesn't show on here that I have, so maybe I haven't. But I know I do have Visa, and I just want to go over to a few other things. Here it shows the street rating at A+. Has an annual dividend rate of, this one's saying $1, which is 25 cents per quarter, and this one's saying about 0.5% dividend yield. It's saying it's a strong buy, and guys, again, the target price on this is $258.69. Now that's amazing. The price right now is only at $197 or so. Or no, it just hit $199.50. So it's almost at $200. 60 basically more dollars to go and beyond, guys. The growth is amazing. It's just an A+ all around to buy. If you want to check this out, I got this at thestreet.com. You just type in the ticker symbol and then put in your email, and you'll be able to get that sent over to your email. You don't have to sign up or become a member or anything like that. Another site I like to use is Market Watch. It's saying that it's at $199.27 right now. Another reason why I like to look at different sites, because sometimes the information is a little bit different. Now, Robinhood tries to get everything good and updated as much as possible, but sometimes they lack in a little bit of the finer little details. So this one's also saying a yield of 50%. That's two companies, MarketWatch and The Street, which have said it's a 0.5% dividend yield, which is Robinhood was saying a 0.6. So I mean, it's a little different. Like I said, do your research. The earnings per share right now is at $4.06. It looks like shares outstanding and your public float, you could see here, ex-dividend date of July 6th. So anybody that owned this before July 6th will get a 25-cent dividend into their account. And they have an average volume of 3.51 million. I love looking at this chart too because it shows performance a little bit better in a way that Robinhood does. But this is more statistically. So again, Robinhood's great. I love it. Just do your research. 3 months is saying 17%. Year to date's at 31%. And then 1 year is at 63%, guys. Amazing stuff. Lots of news on it. It's another strong buy is what the analyst rating is. Again, Morgan Stanley. Information, different companies that are with them, Amazon, Verizon, AT&T, that are their competitors. They are also great companies to look into. I will possibly have to do videos on them as well. I did make one on Visa. You could always check that out. But again, guys, this is why I think that it's a strong buy. Visa has a great, MasterCard has a straight earnings report forever. I mean, they have a lot of people employed. It's just amazing company to get into. You can get into it right now. Even on Friday, it made 90 cents. It was up 2% for the past week at $3.92. For the month, it was a little bit down, had a little bit of a dip, but honestly, that's an opportunity to buy such a great value of a stock because now it's at $1.99. And for 3 months, it's up $28. That's great, guys, for 3 months per share. You have 3 or 4 shares, you're up $100 or more, so it's great. So anyways, that's my video. Hope you guys enjoyed. If you did, please smash the like button, subscribe to my channel, and share this with your family and friends. Let them see the video and let them see how strong MasterCard is right now. All right, guys, have a great day.